The way I look at it is the primary thing that we see gold react to is uncertainty. So the more certain the outcome, the less significant of a move we're going to see in gold. I think that gold has got a lot going for it. I think we're looking at new levels. And as I said, I would like to see a correction at some point that would be healthy, but I'd like to see it come down maybe to 2,600.
Oh, interesting.
My target of 18, and then lastly, my target of 28.65. We've hit 28. If that's all we get, I am completely satisfied. It didn't hit my target, but it certainly went really close to it.
Gold futures have dropped 0.5% to $2,736 per troy ounce as the precious metal faces downward pressure from surging U.S. dollar strength and rising Treasury yields. This market shift follows projections that Republican candidate Donald Trump has won the U.S. election. Expectations of increased government debt under a Trump presidency are driving Treasury yields higher, while the dollar strengthens against most other currencies, reducing gold's appeal as a safe haven asset in the short term. GaryWagner, editor of the Gold Forecast, provides a technical and historical analysis of how different election outcomes could impact gold prices. Drawing from data spanning administrations from Reagan to Biden, Wagner explains how gold has typically reacted between Election Day and Inauguration Day. He explores scenarios under both potential Trump and Harris victories, assessing their likely influence on gold's movement. With the Federal Reserve anticipated to cut rates this week, Wagner also shares his outlook for gold prices, pinpointing crucial technical levels. He suggests that a pullback to $2,600 could represent a valuable buying opportunity in today's volatile economic climate, offering investors an entry point as uncertainties around policy and inflation continue to shape market conditions. Donald Trump coming to power is likely to heighten the Sino-U.S. trade tensions, which would be positive for the metal. Overall, as traders focus on the ballooning U.S. fiscal deficit, rising U.S. debt-GDP ratio, geopolitics and inflationary factors, Trump's victory will boost the appeal of the yellow metal. In 2016, during Trump's administration, gold initially declined by 5.4% between Election Day and Inauguration, but it ultimately rose by 47.9% over his four-year term. GaryWagner finds this historical trend compelling, noting that gold's movement often aligns closely with political and economic shifts. He anticipates that a potential mix of fiscal spending concerns and tariff-related inflationary pressures could contribute to economic uncertainty, which would likely influence gold's trajectory. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
Well, there's some interesting facts. I don't know that I can make or draw conclusions, but I did some research back to the Reagan administration in 1980. By inauguration, it went down 12% during his first term, minus 46% at the end of his first term. His second term, it went up 23%, but also down 10% from the election to Inauguration Day. In terms of what stands out is really J.W. Bush and Obama. With J.W. Bush during the two terms from 2000 to 2008, gold rose about 120%. Wow. That's pretty significant. And Obama, interestingly enough, in 2008, when he was elected, gold gained 18.5% between the time he was elected and the time he was inaugurated, and then went up 133% that year. The second year, it was unchanged between Election Day, when he got reelected, and inauguration, and it gained 23% over the next 4 years. The only other thing that might give us some indication, when Trump won in 2016, went down 5.4% between Election Day and inauguration, and up 47.9% that 4-year term. I look at it is the primary thing that we see gold react to is uncertainty. So the more certain the outcome, the less significant of a move we're going to see in gold. But the one thing that stands out, because we did have a term with Trump, and he stated that he will reenact tariffs. If Trump wins and tariffs come back into play, that is an inflationary pressure, because American citizens are paying more for imported goods, obviously with tariffs, and therefore we could expect more pressure on inflation. How high it might go, where it might go, it's too early to tell. But we do know historically that when the government relies heavily on tariffs for imports of foreign goods, that creates inflationary pressure. And so that's the primary thing. The second thing, and I think it might be true for both candidates, is Trump spent a lot of money during his term in office and created a larger budget deficit. And a budget deficit, of course, has certain reactions in terms of the economy itself. But the Biden administration, and we can't extrapolate too much to the Harris administration if that comes to pass, as much as we can say if she does revamp Medicare and if she revamps Medicare, that's a costly procedure, and that would add to the budget, and that would create more fiscal debt. And we know the problems with greater fiscal debt and the things we have to watch for and the uncertainty that that can create in terms of the economy. So that would be the best way I'm viewing the outcome with Trump and with Harris. With Harris, I'm concerned about too much fiscal spending. With Trump, I would be worried about too much fiscal spending as well as the effect of tariffs.
Gold has demonstrated impressive resilience throughout 2024, achieving remarkable growth. Beginning the year at $2,063 per ounce, its price has climbed to over $2,748 per ounce, just shy of a recent record high. This surge has rewarded early investors and those who entered even a few months ago with substantial returns, showcasing the benefits of gold's exceptional upward trajectory amid the year's economic volatility. GaryWagner highlights how election outcomes could significantly impact gold's trajectory, especially if results lead to heightened uncertainty. He explains that a contested election could drive gold prices to new highs, potentially sparking a parabolic move toward his target of $2,865. Wagner identifies $2,600 as a realistic pullback level in this turbulent environment, viewing it as a potential buying opportunity for those looking to capitalize on gold's long-term momentum. Now, let's redirect our attention to a video.
I am going to sit on the fence in that we have to acknowledge that the geopolitical tensions around the world have been a component, whether it's a major component or a component as strong as other components, especially the election. And as long as the war in the Middle East rages, and as long as there's an escalation between Russia and Ukraine, and there certainly has been with North Korean troops now entering that area or that arena, it opens even if it's a minute possibility that this could involve more countries and become more globally, a more global scenario, one that's exceedingly scary, and two, that uncertainty would be highly supportive of gold. On a technical basis, it's hard to say. If we could put up, I have a monthly chart that we've prepared. If we could put it up, I'll tell you why it's very difficult to talk about the floor, and I see that that's come up. You can see that over the last year or maybe 8 months, it's gone parabolic. You've got almost a straight line from January 24, when it was sitting at $2,000, up to now, which is just, and we're looking at spot gold, by the way, of about $2,700. Absolute floor, if you look on a technical basis, it's this triple top that occurred at 2000. Do I think it would go that low? I do not. But if we go back to the middle of 2011, when gold ran virtually from 1,000 to 1,900, by the middle of 2011, from 2011 to the end of 2015, it moved back down to 1,020. It halved. So is it possible at all? Well, we've seen that historically happen. Typically, a parabolic rise up is followed by a pretty dramatic fall down. And whether or not that happens, we'll have to see. But the one thing that myself, as well as other analysts, have talked about is gold has moved up so quickly, so strongly, that it's almost given at least short-term traders the desire to find a place to just whack it, to pull profits. But the underlying things that have been supporting gold and taking it higher, which is the election and geopolitical tensions worldwide, because inflation is starting to tick down, as long as that geopolitical, the problems that exist remain, that will be highly supportive. And so in terms of a level of support, even a pullback to 2,600 would be realistic. It wouldn't surprise me. A pullback well below that could happen because of the way it went up parabolically. But to me, fundamentally, and I am a technician, but I'm a hybrid technician. I look at fundamentals first and then use the technicals for placement, where to enter and where to exit, what's logical support and resistance levels. I don't see there being tremendous pressure to the downside to take it to technical support, which when you looked at that monthly chart, you can see that triple top that comes in right around 2,000. I don't see it going back down 700, but that's the strong level of technical support. But it is the fact that it's moved up parabolically that puts up my alarm buzzard, so to speak, to be careful and watch for something that might create a rationale or reason to really sell into the market. I think that gold has got a lot going for it. I think we're looking at new levels. And as I said, I would like to see a correction at some point. It would be healthy, but I'd like to see it come down maybe to 2,600.
Oh, interesting.
My target of 18, and then lastly, my target of 28.65. We've hit 28. If that's all we get, I am completely satisfied. It didn't hit my target, but it certainly went really close to it.
Gold has surged over 30% this year in a record-breaking rally fueled by escalating geopolitical and economic uncertainties, prompting robust demand from both central banks and individual consumers. This upward momentum has accelerated in recent months as the Federal Reserve shifted to rate cuts and the U.S. election approached, allowing gold to overcome traditional obstacles like rising Treasury yields. The metal's exceptional performance underscores its role as a safe haven asset in a climate of heightened risk. If the U.S. election brings increased economic uncertainty, do you think gold will hit new highs, or is it close to peaking? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.